Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. It is Valentine's Day 2026. Time is currently 9:33 a.m. I hope that you have a very good Valentine's Day and get some nice roses or chocolates or whatever. Personally, I've never celebrated Valentine's Day because I think it's pretty silly. But that's just me and that is just my personality. Okay, so what I'm doing in today's video is something just subtly different. I'm only going to be answering and replying to members' questions and or comments. And the main reason I'm doing that is to cut down the amount of questions I want to answer, because when I go through all your questions and comments, there's so many I want to answer. In fact, I could do 3 or 4 answer reply videos every single week. So there are actually a lot of questions and comments I actually don't get to. But so I thought I'd just limit to members. They do pay $1, $2 a week, some of these. And I thought, if you're willing to pay that amount of money, I'm more willing to answer your questions and reply to your comments. The other thing I'm doing is a little bit of editing. So typically when I record these sort of videos, no editing. I just start recording, and that's it. But what I'm going to do is actually sort of, it's just subtle change in editing where I'll just highlight the question, bring it forward. Like the first question from Roggledorn. Oh, the other thing I'm going to do is to make timestamps easier is I'm going to write down on a notepad right next to me the time I'm starting each question. And let's do that now with Roggledorn. And I'll be pausing. Nice little pause like that one before I start each question. Okay, so Roggledorn asks, no, actually, this is more of a comment, a really good comment. Yes, HPA is high purity alumina, otherwise known as 5N purity, 99.999%. The existing 2 alumina refineries in Gladstone, Queensland, and those in WA typically make 3N alumina, 99.96%, which is smelting grade. Now, the difference between 5N and 3N doesn't seem all that much, but there is a difference. Now, I first discovered high purity alumina maybe 10, probably would have been 10 years ago with alpha HPA. Oh, by the way, ComSec was doing repairs. Oh, it looks like they fixed it. So when I started recording, they were down. Yeah, they're up. They're up again. That's good. It was like a 45-minute period where they were down. Anyway, so alpha HPA. HPA stands for high purity alumina. And I started following this company probably, I would say, A4N. Yeah, 10 years ago. And that's when I discovered HPA. I looked at it for a brief period. So let's have a look at the weekly chart for this one. No, I reckon it was probably 2017, 2018 when I discovered this company. Or maybe, no, it wouldn't have been 2010. It would have been 2017 when I discovered, in fact, the share price has gone up a fair bit since then. I would have said I've discovered this one because there was a fair bit of interest in this company, 2017. And at that point, the share price still cycles like 2 cents. So maybe I should have taken a closer look at this company. So I discovered high purity alumina, and it seems like there is more interest in this space. I Googled who makes HPA, high purity alumina in the world, and it gave me some producers. I'm not sure if Alpha HPA is a producer yet. I thought they weren't just yet. So a few companies in Japan, France, Germany, South Africa, and some emerging and regional producers include a few from Canada and Australia. In fact, Altec Advanced Materials, Caddo, and Impact Minerals, which I've neither of those 3 companies I've heard about. Also, high purity alumina is quite important. In fact, there's a little, I don't know what you call it, Australian Critical Minerals Research and Development Hub, which is an agency established in October 2022 under, or through, we'll say, through Australia's leading science agencies, ANSTO, which is Australia's Nuclear Science and Technology Organisation, Geoscience Australia, and CSIRO. So they're working together to develop urgent technical solutions needed to achieve the vision of the critical mineral strategy. And they have quite a few documents, and in one of these documents they do mention high purity alumina, sort of like a case study here. And high purity alumina is quite important because if you have a look at what it's used for, semiconductors, lasers, LED lighting, sapphire glass, catalysts, and lithium-ion batteries. In fact, when I read about HPA back 2017, The only thing I can remember it being used for was screens for mobile phones. That's the only thing I can remember. Anyway, so it's a little bit more diversified than that. And the other really interesting thing here was how the market is going to explode over the next 5 years or so. So the market in 2024 was 4.63 billion US dollars, and that's going to triple in the next 5 years, up to 15 billion US dollars by 2030. So have a look at this document if you're more or have a little bit of interest in this space. They also talk about how it's refined, the processes, that sort of thing. And the purest form of HPA at 99.9999% has a market value that can exceed 70,000 US dollars per ton. 70,000 US dollars per ton. And I would also assume, without me knowing much about the processes, and the reason I'm saying this is because it's taken alpha HPA a long time to get to this point. This is a little bit more of a moat. You just can't start producing HPA like that within the seconds in geological times. So I think these companies would have a bit of a competitive advantage. But again, I don't have much knowledge in this space. Anyway, so thank you for that, Rogel Dog. Okay, next we have Rich Christmas Cake. Great breakdown across many issues comparable to one of your hikes to a degree. No, not really, because one of my longest hikes, my longest day hikes would be about 12 hours, and that can be a fairly long day. Yeah, about 12 hours, maybe 10 to 12 hours. So anyway, the pre-announcement sell-off on Neuron Pharmaceuticals raises a huge question. Is it a leak or just professional reading of the tea leaves? Big funds are paid to watch body language and loose lips from a distance. I've often wondered if an ethical CEO could plant a fake leak to see if the market reacts, effectively testing if the leak is coming from their own office or the regulators. It seems to happen so often, it's almost normalized. I am quite cynical. Whenever I see a reaction from the market before they release a negative or positive announcement, I am naturally, and I think we're all naturally, a little bit cynical. Hey, someone knew this information beforehand and they're profiteering off this information. And I think that's just a natural sort of path to go down. And I think maybe it's over-exaggerated. Maybe a lot of times it doesn't happen like that. With Neuron Pharmaceuticals, however, it was a bit dodgy because they released an announcement, a negative announcement, a couple of weeks ago. Go back to daily chart. They released a negative announcement on the 3rd of February. Share price dropped about 10% on the day. But before that, leading up to that, you can see the share price just sort of collapsed. It went from over $18 to $16 in a few days of trading. And that did look a little bit suspicious. But just because it looks suspicious doesn't mean anything untoward is going on. Now, on to whether or not a CEO should plant information or fake leak news, or reveal something to like the board members and senior management, something's going to happen significant with the company, and to see whether it's leak from board members or from senior management. The first question would become, is that or could that be considered ethical? But I definitely can understand if a CEO or anyone who is a head of an organization and there is the potential of information leaking, you want to seal up that leak. Leaks are not good. You have a leaking pipe, you want to seal it up. And you want to control the narrative whenever information is coming out from a company. And if information is being leaked, you can't control that narrative. And what I mean by narrative, I mean you don't want to see the share price dropping or rising significantly because you will get questioned. You should get questioned. So maybe that's the right thing to say. You should get questioned, not necessarily will get questioned, which is probably another story. Anyway, so is it ethical to do this sort of thing? Yeah. Does the means justify the end? No, does the end justify the means? Sorry, I had that mixed up. Does the end justify the means? And maybe in this case it does, because leaks could be considered really negative, particularly if it's from a board member or senior management. You don't want those people leaking information, other people profiteering from that information. Anyway, so, but is that an ethical thing to do? Yeah, I think it would be. Yeah, anyway. But my big thing is I don't think it happens as much as what we think, or it probably doesn't happen as much as what we think. You know what I mean? It probably doesn't happen all that often. It just looks suspicious when it looks like it is happening. Okay, Jason Lang. Actually, I've got to pause. Jason Lang, I actually wish your videos were longer. So I've mentioned that I think this video is going to be a little bit shorter, but a lot of times when I think a video, particularly an answer and reply video, is going to be like an hour long, it turns out to be an hour and a half. So wait and see, because sometimes I can ramble on. Jason also learns every day from you, thanks to your dedication to your channel. More talk, more knowledge. Well, yeah, thank you for that. So unfortunately, I think this video is going to be a little bit shorter. And the other thing is, I think there was a video a few weeks ago which was 2.5 hours long. That's a little bit too much. I do like to have a little bit of spare time in my day. So unfortunately, I don't think today's video is going to be as long. But Jason, you are a member, and that is why I'm answering your question. I should also mention, just because you're a member and you do have a question or comment, doesn't necessarily mean I'm going to be replying or answering, because I do get a lot of questions and comments from members as well. Kelly Ma. Hi, Kneppy. I like all your videos. Would you be able to release a potential trade where you go through different stock charts on the weekends, which I'll be doing this weekend, or my trade where you look at your trading positions on Sunday instead of Monday? Many thanks and much appreciated. I do release these videos on Sunday now, Sunday evening, after in fact, I'll show you. I'm pretty sure I did. Let me have a look. Let me just verify. Yeah, so the last My Positions video for members, I did release that on, Friday evening. Not Friday evening, Sunday evening, because it says February 8th, 2026. And according to this, I released it before my technical update, which I don't think is right. So what I'm trying to do now is release those videos on a Sunday evening, but maybe 8 p.m., something like that. Whoever wants to watch or listen to these videos on a Monday morning can, but those who want to watch it or listen to it on a Sunday evening, they can, but maybe 8 p.m. is a little bit too late. And last night I released Nick Scully results, beat 4 minutes and 28 seconds. So have a look out for that if you are a member. Bob McAllen. Software companies have been declared dead roughly every decade since the 1970s, and yet the industry keeps expanding. Software companies without a good business model have always tanked. 5 thumbs up. So 5 thumbs up. People like this comment. I think this is true. I think there is a lot of fear in the market right now that AI is going to destroy every single, well, not just every single software company, every single company, every single job in the world. In fact, we had the Microsoft CEO, I think it was a Microsoft CEO, saying all white-collar jobs are going to disappear within the next 18 months. I don't think that's going to happen. I'll give that a 0.001% chance of happening. But I do think over time we are going to see a lot of those sort of jobs, white-collar jobs, management jobs, accountants, lawyers, they are all under threat. So I do think there's going to be a significant revolution, we'll say in the next 30 years, when it comes to jobs, how we work, that sort of thing. This is a revolution. I'm going to say that we are seeing a revolution starting. It's going to take much shorter time than other revolutions in the past. And the way we work in 30 to 40 years is going to be significantly different. At some times, I'll say it's going to give a lot of people opportunity to do more creative stuff, more leisure time, that sort of thing. I do think that's potential. But I do think, and that's actually a pretty good tweet. I'm going to see if I can find a tweet. In fact, I bookmarked it, I'm pretty sure. So, here we go. So Microsoft AI CEO Mustafa Suleiman says most white-collar work will be fully automated by an AI within the next 12 to 18 months. If that's true, it's an economic earthquake, says Bernie Sanders. I don't think it's going to happen like that. I think the time frame is much longer than 12 to 18 months. But there's a really good reply to this from the Perenti CTO. Mentioned Americans are being lied to about AI. I don't think they're being lied to. I don't think there's lies. These are lies. These are just, some people have been a little bit overly dramatic in timelines. Elon Musk has had this problem in the past. He's always been too aggressive with timelines, but I think what he's talking about is true. Anyway, so I like what Palantir is saying here, because he's being neither overly pessimistic or overly optimistic. For instance, he says, On one hand, you have extreme doomerism, this idea that AI will lead to massive job losses, oppression, and the extinction of humanity. Silly. Silly. But on the other hand, you have a utopic fantasy that no one will have to work. I'm sort of in between. I'm in the between. I do think there's going to be opportunities in the future where where humans will have more time. And I think time will be understood to be much more important than money. Well, that is my wish anyway. And that is what I've discovered, that time is much more important than money. And I think once you get to that point, happiness just increases substantially. But that's just me, maybe. I do believe that a lot of rich people are just not happy because they value money way more than time. Anyway, the truth is neither. AI is an incredibly powerful tool. The future of AI is being determined every day. It is not predetermined for us, and it's going to be determined by the people who wield it. Yeah, I believe that as well. And in my opinion, we are in the most exciting times in human history because the future is a little bit uncertain which path we're going to go down. But I do think AI will benefit all humanity in the long run. And I think it's a very exciting time to be alive right now. Maybe that's just me. But talking about software companies have been declared dead roughly every decade since the 1970s, blah, blah, blah. If we go through some other tweets I bookmarked, see if I can find them now. Yeah, here one, Stock Market Nerd. I just read a tweet from a fund manager comparing software companies to asbestos. Getting closer. And what he's mentioning there is peak pessimism is the time to be buying. And the very fact that, there would be a fund manager. I tried to verify a fund manager said this, but I couldn't find it. Comparing software companies to asbestos, that means peak pessimism is almost upon us, I think, which is a good time. And I've been looking closer and closer at some of these tech companies because they're looking, relatively speaking, really good value. And that is a time to be buying. The old Warren Buffett quote, be greedy when others are fearful. And I think we're in those times right now when it comes to these sort of companies. Thank you for that to Bob Allen. I want to say Malin, but I don't know. Okay. Paul, L-Y. Hi, Kneppy. I've been watching Polynovo for a while, and last Friday the share price dropped to 200-week low, to really 200-week low. I would like to hear from you, your opinion. Is this stock value at the moment? So Polynovo, the company I'm pretty sure is profitable. I have a feeling they are profitable, although they're releasing results 20th of February. So next Friday they're releasing results, but I have a feeling they're very close. In fact, they've got the trading results unaudited. I think I remember reading this and thinking, oh, that's not bad. Sales up 26%, sales in the USA up 25.3%. They don't mention profitability just yet. Cash and cash equivalents 29.3. Operating cash flow positive 9.5 million. And that's a significant improvement from the previous corresponding period. Positive cash flow from operations. Oh, that's just operations. Anyway, so there's a chance they're going to be close to profitability, but the share price, for some reason, the market doesn't like that sort of thing right now. But the share price is under pressure. I will say right now, when it comes to whether this company is good value, it's really hard because they haven't been profitable. If we have a look at just the financial history of this company, we don't have enough information to determine whether this company is good value or not, because we don't have, for instance, if we go to the overview, so revenue growth is really nice. We're talking about 40% revenue growth over the last 3 or 5 years. So it does look like they are just profitable at this point in time. In fact, if you have a look at the financial history, really good revenue growth, which is the first thing I always look at. Really beautiful revenue growth. But I think the market is wanting a bit of profit coming through. And they've gone to profit. There we go, $13.2 million of profit. So based off that, with that sort of growth, in fact, the profit doubled from the previous year. So if we think the profit can sort of increase by similar rates, maybe not double, so say the profit could get up to $20 million at least, and then keep on expanding from there. You could probably do a DCF or something like that. But I do think people who do DCFs tend to be overly conservative. But the markup of this company currently is, let's have a look, I would say 700 million. Might be a little bit low, a little bit high, 635.58 million. So just think the company can have a profit, say $20 million. It's still trading on, it's only a P/E ratio of 30. Let's see if they have a forward-looking P/E ratio. It's got 52.9 next 12 months. I wonder if that's, I just don't know if that's on a price target of 181. So it's got valuation NTM, price target 181, P ratio 52.9. I don't know if that's that P ratio is based off that price target or if it's based off the forward-looking estimates. I don't know. If we could actually figure it out, because if we go look at, okay, so they've got a profit of only $13 million for 2026. That's the forward-looking estimates. And then 2027, they got a profit here of 26. Anyway, so Polynovo is actually looking interesting to me because really nice growth, and the share price has fallen a fair bit recently. In fact, if you have a look at the weekly chart, who was it? Paul is right. The share price has dropped below $1. So $1 is a very important level. So any round numbers that start with 1 tend to be very powerful psychological levels for investors and traders, even investors. And whenever they see the share price get to like $1 on the way up or the way down, it acts as a really important and significant support or resistance level, because for some reason we're obsessed by round numbers that start with 1. And although for Polynovo, I probably lowered it just a little bit to around about 95 cents. Anyway, the share price, whenever this share price of this company gets to about this level where it is now, share price bounces over the last 4 years anyway. If we go back further, no. Anyway, so I do think right now there might be some value with Polynovo, and I have looked at potentially taking a position in this company in my super, which means I'm not really trading it. It's just purchase for possible value. I think this all depends again. All depends on your time frame. Are you thinking long term? Polynovo long term, maybe 5 years, because there's a chance in 5 years' time the profit for this company could be 50 to 100 million. I'm just saying it's possible. I'm not saying it's going to happen. Just saying it's possible. Another one from Paulie. Hi, Kneppy, can you please have a look at CLX, and is the company good value? CLX. Wait, what there? CXL is Calix, or is that CTI Logistics? I always get these two confused. So you're talking about CLX, which is CTI Logistics. Okay, so it's not Calix. Calix must be CXL. Always get them confused. I am trading CTI Logistics. I bought it 223. And the share price is currently 223. I'm a little bit surprised the share price didn't drop a lot on Friday because of fears that logistics companies are going to be torn apart by another company, a very small company, an ex-karaoke company, because they announced a new AI app that helps logistics companies. And I think that was a little bit of an overreaction from the market. Anyway, so a little bit surprised this share price of this company was not down more. Okay, so CTI Logistics, and the main reason I took a trading position in this company, in fact, we'll have a look at the chart in a second. Main reason I took a position in this company would have been profit guidance released on the 15th of December. And this was a nice little upgrade from the company. Profit before tax, 55% higher on the previous corresponding period, driven in part by strong revenue growth in October, November, with revenue for the first half expected to be 8% or 7% up on the previous corresponding period. CTI's transport and logistics have benefited from increased demand across freight services as well as project work in WA. So things are moving quite nicely for this company. That's the main reason I took a trading position. If we have before we have a look at the chart, if we have a look, CLX. If we just have a look, I wouldn't necessarily call this company high quality. In fact, if you have a look at the growth in revenue, it's actually nice. We're talking about 8 to 10% revenue growth over the last 5 to 10 years. Earnings per share growth has been all over the place. If you have a look at return on equity, 13.5%, return invested capital 7.8. So it's sort of borderline high quality there. That's a 5-year average. Margins, particularly operating margins, 8% is fairly low. I like that to be a little bit higher. P ratio 13.8 according to this. And if you have a look at the financial history, oh, that's right. Fiscal AI changed it. So if I'm looking at certain metrics for one company, in the past, you'd have to go back to these metrics if you change companies. Now they've just maintained the metrics you last looked at for each company, which is really good. So they've changed this recently because it never used to do this. Anyway, so this is CTI Logistics over the last 10 years. Nice growth in revenue. Sort of paused in the last year. I wonder if they have any sort of forward-looking numbers here. They do. They do. Nice growth in revenue, very low profit numbers based off that revenue because low margins. And profit, it's been around about 15 million the last 4 years, expecting to get to 20 million this year. So a nice steady profit number. Company's market cap is, according to this, 186 million, although enterprise value, they do have a fair bit of debt. Oh, they have a fair bit of debt, which you should take into consideration. So if you look at the EV, it's about 300 million, profit of 20 million. So we're still talking about a P ratio, a little bit, no, not a P ratio. The P ratio is much lower because they have a fair bit of debt. So just based off this, that would be one, I wouldn't say concern, but I would prefer that debt to be a little bit lower. And that is why maybe the P ratio looks fairly low at 13.8. If they do get to a profit of $20 million. Anyway, so I'm just trading this company right now. CLX. Okay, take your time, TradingView. In fact, the long-term chart looks really nice. The low back in COVID-19 was at 50 cents, so it's gone up fourfold since then. And there is this uptrend line all the way through from the bottom in 2020 all the way through to now. And the share price has been an uptrend. And we saw a breakout when they released that good news, that profit guidance in on the 15th of December. And the share price popped up. And I just bought on that day. A bit of a breakout. And the share price did pull back a little bit yesterday because of that logistics news, that logistics software. And not much selling, however. Actually, that's the weekly chart. Yeah, so we have seen a little bit of a pullback. Marcus Stent. You don't review a tungsten chart, question mark. Not worth it, question mark. What should we expect with tungsten given it is one of the Australian government critical metals? Well, the main reason I don't look at tungsten charts is because there are none. In TradingView anyway. So if you put in tungsten, there's nothing here. In fact, what I mean by nothing, go to futures, nothing. Tungsten not found in futures. That is where you should find it. So if you wanted to have a look at copper chart, yeah, copper futures, copper, CFD, it's a lot of copper here. So it was really hard to find tungsten, but there is a way I have discovered. Now, you could pay for it. There are some websites where you can pay for charts, but the payment is a fair bit. But if you go to Business Analytic, this site here, I've bookmarked it, and you just put in tungsten, have a look at tungsten price chart. I'm not sure which one you should look at. There's a tungsten price chart and a tungsten ore price chart. You get 7 years of history, which is better than a 1-year history I found on another site. And so we've got 7 years of history here for tungsten APT. And you can see the price of tungsten had gone bananas during 2025. It went actually a fair bit. It almost doubled. I think this is a forward-looking price for tungsten. And the other one was, oh, maybe this one is better. This is tungsten ore. We have quite a few lines here, so different areas in the world. And you can see tungsten going up pretty nicely in 2025, and they expect tungsten to sort of go sideways, which I don't think is going to happen. Anyway, so that is the way to look at tungsten ore prices. The other one was potentially trading economics. I can't remember trading economics. Let me just have a look if I can find it here somewhere. Here it is. Tungsten. Let's have a look. They should have it, you would think. No results found. Oh, okay. Anyway, so that's the main reason I don't look at tungsten charts all that often is because it's hard to find. And yeah, that's one of the reasons why the price of tungsten has gone nuts is because it's considered a critical mineral. Chris Mallison, have you looked at NMG? Is that new Murchison Gold? Is that new Murchison Gold? And yes, I started looking at new Murchison Gold because this is one of the viewers' more favored companies. New Murchison Gold. In fact, if I can find it here, let's have a look. No, I won't do it now. I was going to do an update of the performance of our portfolios, but I'll do that at the end of February or start of March. Anyway, new Murchison Gold. I had a look at this just because the viewers as a whole like this company. If you have a look at the most recent Appendix 5B, this is a producer. That's another reason why I'm having a closer look. So if you have a look at the most recent numbers, receipts, $111.4 million. That's in 1 quarter. And operating cash flow positive, $75.5 million, which is telling me a nice, clean operations here, efficient, nice margins just based on that, and not much spending when it comes to investing activity. So a lot of that operating cash flow goes to the bottom line, and the cash on hand increased from $19.7 million to $92 million. So I'm not sure if the company's just in production. I'm not sure if they just started production, but nice quarter for New Murchison Gold. Now, based off this 1 quarter, and I try not to do this, but sometimes I will. But fine, where is it? Sometimes I will do this because it's only a quarter, 75 million. So you just go, well, say they can sort of achieve this sort of operating cash flow over a full year. We're talking about $300 million of operating cash flow. And if you have a look at the valuation of the company right now, we're talking about a company with a market cap of 695.131 million. Not sure if that's right. Ordinary shares, 10.86 billion. Is that right? Is the market cap 695 million? Because that does look low. So according to trading, or according to ComSec, the market cap of the company is 695. So yeah, $695 million market cap. Do they have much debt? In fact, you can have a look at that just by going to section 7. They have no debt, apparently, according to that. Anyway, so they have a fair bit of cash on hand, so almost $100 million of cash on hand. So it means the enterprise value of the company is like $600 million or something like that. With that sort of cash flow per quarter, if they can continue it, looks extreme. The question becomes, how long is the mine life? Is this sort of production not sustainable? That sort of thing. I don't know all that much. They might talk about that in the commentary. But just having a look at what I've just mentioned there, I do think it needs a closer look, personally, just because it does look interesting based off that market cap and their production. Now, the chart looks good. Chart's been looking good for a while. Obviously, some of you love this company because it was a popular pick among you. NMG, New Murchison Gold. Yeah, the chart is a beautiful chart. In fact, if you have a look at the weekly chart, you can just see it just accelerating from October 2024. So it's gone up 6-fold since then. The other thing I should mention is if gold pulls back, if gold halves from here, New Murchison Gold share price will drop a lot. So again, this is a price taker, but the question becomes, is there value here? So according to TradingView, market cap is 770 million. So, I'm just going to see if, yeah, they've just gone into production within the last year. And in fact, in the last half year, $17 million of revenue, $6 million of profits. So they've just started production. I'm going to have a closer look at this one just because, just by discussing it here, I like it a little bit more than I thought I was going to. Rich Christmas cake again. Hi, Kneppy. Thank you for your insights. Interesting chart, Life 360. I'm not sure if it's interesting anymore. I've listened to the many proponents saying just buy it, but one main excuse not to was the fact I've never used a service or know anyone that does. Conversely, do your own stocks that you also contribute to the business. how well they are run becomes apparent. Probably the main one for me is Google. Just Google Maps alone warrants it as a buy for me. Okay, so 2 parts to this question. First one is Life 360 and not knowing anyone who uses it. I don't know anyone who uses it, but I have seen Life 360 mentioned in crime videos. It's like someone disappeared and they were concerned because they used Life 360, that sort of thing. And that was actually the first time this company sort of perked up to me, is when I started hearing about it in non-investing related videos. And I do watch those sort of videos on occasion. So one of the reasons I got a little bit interested in Breville is because, even though it was probably a paid advertisement, it's simply because a Breville product was mentioned in the Billions TV show, and that I went, oh, hello. They probably paid for that, but it was still this thought that Breville's products are considered good quality or great quality. So when it came to Life 360, it was just the very fact that it was mentioned on non-investing videos that people do use it. So use cases are, a lot of people use it. I do make fun of Life 360 on occasions, talking about it's just a stalking app. And I do think people, a lot of people complain about privacy, that sort of thing, yet they use Life 360. I'm assuming here. They probably use Life 360 to track what their sons and daughters are doing, their children are doing when they're like 17, 18 years old. What's the difference? I think everyone deserves a little bit of privacy. But I do also understand why people use it. But anyway, so that's Life 360. The other part of the question is, do you own any stocks that you also contribute to the business? Yes. Yes. Well, I own Microsoft, Alphabet, Apple, all these companies. I use their products. I don't use their products just because I own them. What else? There's probably a lot I do use that I do own. Yeah. Anyway, so that's just me. So I never buy something just because I use their product. Or I'll never not buy something because I refuse to use their product because I'm just one person. And for instance, Universal Stores, I would never go into Universal Stores, but it doesn't mean I won't own it just because I'm not the demographic that would use it. I don't like gambling, but I do own Aristocrat, stuff like that. Marcus Dent again. You mentioned in your Monday wrap that you bought Web at the bottom of its price, and I should, for full disclosure, mention that I also have sold Web. So I bought Web and sold Web in the same week at a nice 30% profit. I'm going to take that every single time. Plus, I have no idea what's going to happen moving forward. Anyway, it was always a trade. It was always a short-term trade. Can you let me know how you did this? Was it late trade Friday night, watching the 1 minute chart, and out of trading hours limit order, buy on the weekend, or an at-market trade in the first minute of opening on Monday morning? I'm actually still not sure the best way to buy a stock that I see, and I want to buy on the weekend. Most of the good ones have already jumped significantly as soon as the market opens Monday at 9 a.m. Thanks in advance. Very easy. This was not preordained. That's not the word. This was not planned in any sense of the word. I had no intentions of trading Web. It was just opportunistic. That's another good word. So not planned. It was opportunistic. And what happened was, this is exactly what happened. So, I think was it on Monday the share price dropped a lot? Or was it on Friday? Wait there. Which day did it drop a lot? Yeah, it was a Friday. Okay, so remember that day, the whole market had dropped a lot. And so what I typically do when the market opens, I go to XAO in ComSec, I click on it, and what I do, so it brings up all the constituents of XAO. And what I do is I just have a look to see which companies have done really well, which companies are doing really badly. So, for instance, on Friday, talking about Webjet, actually, this one's called Webjet Group. I forget which is which. Webjet Group down 25.16%. So just after I opened on that Friday, I had a look at this and I saw Web was down 40%. I was like, whoa. What is going on here? What is going on here? In fact, if the whole market wasn't down, I probably would have done this. Web Travel Group, and I was like, what have they done? They haven't released anything because there was no price sensitive announcements, but they did release this receipt of audit notice at 8:44 a.m. And so this was just after trading began. I saw it down 40%. I had a quick look at this particular announcement. I went, oh, this is a significant reaction from the market. The share price at that point was, let me go back. I can almost tell you exactly what time I bought. We'll have a look at the 1 minute chart. If it happens, just take your time. Just take your time trading view. I'm in no rush. Here it is. So now I did not do this in TradingView because TradingView is delayed, but I did this in ComSec. ComSec is up to date. And I had a look at this, and when I first looked at it, the share price was 249. So it was the bottom. In hindsight, it's the bottom. We know that. But all the way down, there would have been people buying going, oh, it's got to bounce now. It's got to bounce, and never bounce. So all I did was wait. I waited for this little bounce here. This little bounce at 9:24, so 24 minutes after the market had opened. So this is Brisbane time, so 10:24 normal time. And I just waited for this one bounce, which was an indication that maybe the bottom had been reached. You can actually see a bit of buying coming in. And I bought at 265, so it was just after that I bought, I think. So it wasn't quite the bottom, but that was a good indication that maybe the bottom had been reached because we started to see buying coming in. And I just waited a few days. I was going to sell at the end of trading that day. I'm glad I didn't because the share price bounced nicely just after that. And then I sold out, was it yesterday? I wasn't sure how much more the share price could rise. And I thought 30% profit is nice. So it was, 265, 30% profit would have been 72. Yeah, it was a 30% profit. So that was my reasoning I bought Web. It was not planned. It was just opportunistic. It happened in the moment. And I just saw an opportunity because in these sort of situations, the markets tend to overreact, significantly overreact at times. And I just saw an opportunity and I just took it. Happy now. Thanks for another video. Gosh, what a time to be alive. I agree with that. What a time to be alive. Maybe for different reasons. I don't know. Officer Buzz, colleagues' stock dropped 7% on Friday and rose 7% on Monday. And he thinks we are so back to even. Amazing math skills. This also shows you that sentiment can shift fairly quickly. Yeah, everyone's feeling terrible on Friday. They're feeling great on Monday because the market has bounced back. But in these sort of volatile times, I think there's more likely to be more downside as well. Anyway, so amazing time to be alive. And the reason I think it's amazing to be alive is just because of what's going to happen in AI and the way we live in the next 20 or 30 years could be significantly different. And amazing math skills, yes. This is like if you see the share price drop 50%, doesn't mean if it goes up 50%, you're back to even. Nope, it has to go back up 100% to get back to even. Just do the simple maths here. Share price goes from $2 to $1. That's a 50% drop. Did I say that right? Yeah. Yeah, 50% drop because I was trying to remember what I said originally. So share price goes to 2 to 1, 50% drop. If it goes up 50%, it's only $1.50. It has to go up 100% to get back to where you started. Anyway, so amazing math skills. Marcus Stent again. What I should do is look at who writes these comments and maybe limit it to maybe 2 per person at most, because Marcus Stent is popping up a lot. Okay, great work, Kneppy. With a lot of mining stock rebounding after last week's correction, I can see some have bounced less than 20%, some 50%, and some have bounced back to new monthly highs already. In general, which one should I be jumping on? Is there a correlation between the bounce back in the chart and future performance? I'm ready to do some shopping, but very confused. Oh, I missed one here from Roggle Dawn. Okay, so if you can answer this, Marcus, I'd love to know, because I think sometimes it's just random. And I think a lot of times it's just sentiment. And there's a company called Tivan. Is it Tivan? Tivan. I think it's, maybe it's not Tivan. Oh, no, it's Tivan, TVN. This company share price barely dropped at all. Another good example is Emeco Metals. This one dropped a lot. This is a gold company that dropped a lot. I don't know why. I didn't understand why. Share price has dropped a lot. I just took profits in this one because I was like, share price has dropped. I don't know why. Compared to some other gold companies, share price didn't drop at all. Don't know. I don't know why. Sentiment, a little bit more negative sentiment in the company. So differences in sentiment. Sometimes it's just, I wouldn't say, maybe confusing is the right word, but sometimes it's, there could be reasons behind it. Sometimes it's far hard to find the reasons. And all it could be is just one fund manager getting out. And that could send the share price of one of these companies down by more than what you would expect. And they could be buying another. So they could be getting out of Emeco Metals and buying. So another gold company I own is Kaiser Reef. And I think this one hasn't dropped hardly any. Yeah, so this chart's okay. So a lot of gold companies' charts haven't dropped at all. I'm trying to figure which one hasn't dropped. Evolution Mining, I think, is at all-time high. Yeah, look at that. That's completely different. There's no negative sentiment in Evolution Mining. And what it could be is Evolution Mining is the biggest one alongside Northern Star. Northern Star released something a little bit negative. So what we're going to do is buy Evolution Mining, getting out of Emeco Metals or these smaller gold companies and putting our money into Evolution Mining. Anyway, so it's if you can understand what's happening, I'd love to know. Anyway, so just because I do have some experience and some knowledge doesn't mean I'm fully experienced and have full knowledge. There's a lot yet to learn. Okay, Roggle Dawn asks a very relevant question, a very important question. When are you back at work, Kneppy? And then he also asked about another question. I'll talk about the second question in a second. When are you back at work, Kneppy? March 9, so less than 1 month from now. It's going to be tight when it comes to my new house. So I talked to the builder on Monday, and he said it should be ready within 4 weeks, which is when I have to go back to work. He said possibly even shorter than that, maybe 3 weeks. And then he said, is he going to call back on Tuesday? Never called back. I'm getting a little bit, I wouldn't say tense, I wouldn't say nervous, but I just want to move in. I just want to move in. Definitely before I get back to work. And with work, I want to go back part-time. I was asked if I can go back full-time. And I went, no. I had the perfect work-life balance before I went on leave. I don't want to go back to work because my work-life balance is even perfecter, if that is a word, on leave, because I don't have to work at all. And I have all this time. And again, I think time is more important than money. I don't have enough money that I can retire, that sort of thing, to have a comfortable retirement. So I was asked, can I go back to full-time? Straight away, my heart just sank. I went, no. The one thing I don't want to do is go back to full-time. I said no. And also, I had been working from home completely before I went on leave. And then I was told full-time, 50% working in the office. And I went, no. We compromised 75%. So do 4 shifts, then 2 random shifts, and 50% working from the office. And then I sent a text back a week later and said, no, I'm getting stressed out just thinking about doing this. I can do 75% work, but I'd need to be working from home most of the shifts. It's a big difference working from home versus working in an office, particularly when working in an office adds no benefit. There's no additional benefit from working in the office. You can do your work at home at a much more efficient. Yeah, I'm way more efficient working at home than I am in the office. Way more distractions in the office. And I don't think management realize that. They don't realize that working in an office is just full of distractions, including the management. Always coming up to you, yeah, blah, 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 blah. And the work I do, a lot of times it's a lot of thinking work. You do have to think a lot. And it's very distracting when you're thinking and then someone disturbs you. And then you have to go back. And it takes a while to get back into that frame of thought. So I am not a fan of working in the office, what I do. And because we don't collaborate, the work is very insular. It's very, what you do, you don't need to be speaking to other people. It's very insular. It's actually perfect working from a home sort of situation. People say, well, maybe they can get staff from overseas. Well, they can't. They just can't. They can't find work or people to work anywhere. And they do want people to be sort of living in the local area just in case you have to go to work. Anyway, so I sent a text back to my manager, not a word. She does tend to be fairly accommodating to what you want, but they just can't find people. They have lost so many people since I've been on leave, and that is a problem in itself. Why are people leaving? Why do people want to leave? And why are you finding it really hard to find staff? And the funny thing is, the work can be really enjoyable. I do like the work. Anyway, so back at work on March 9th, and hopefully I can work at home most of the time. And have you looked at WRKR? WRKR recently. Chart looks good. Okay. I do look at this company. So they do release appendix 4B. 5C, I mean. 5B. No, 4C. What am I doing? 4C. So I do look at this because the share price has run up a lot and the valuation of the company is interesting. So that's why, when I say interesting, I mean it's fairly high. For a company with receipts of 3.2 million and not operating cash flow positive, in fact, they were negative last quarter. So I'm not saying the financial numbers to justify the markup just yet, but this is backward looking and the market sometimes is quite forward looking. So the market is expecting some pretty good growth with WRKR, but the question becomes, a lot of times the market can be completely wrong with the timeframes and the timelines, and the market can get really be a little bit too positive with the growth of a company, and that could be the case for WRKR. I don't know. I'm not a big expert of this company, but the chart was the one that got me. If the valuation of this company was a little bit lower, I probably would have traded this, to be honest with you, because the company has a market cap of 300 million or something like that. 300 million, 247.56 million. So I was thinking, yeah, if the company had a market cap of, say, 30 million, I'd be all over this one. Well, maybe not true, but the chart was looking good. Share price has pulled back a fair bit recently, but this could be the buy the dip situation because we do see the share price dipping quite often, and this is the time to buy if it was a buy the dip situation. If, it's a big if. Volume there, not a lot of volume coming through. I'd love to hear why people are really positive on WRKR. I have heard quite a few comments about WRKR in the comment section, but I am not there yet. And this really exemplifies that conviction is going to be different for everyone. Some people have high conviction about this company. My conviction is not that high, just because I prefer to see the financial numbers coming through before I get ultra excited. Okay, another one from Murchison. Oh no, we've already talked about that one. Nice 007, we call him Bond. Can you please review HYGG and ATC ETFs on ASX? Both are quite down a lot and around below 200-week moving average. Seems good for long-term investments. HYGG. Hyperion Global Growth Companies Fund. I've never heard of this one. Active ETF. I thought the whole point of ETFs were they are not active. They're more passive. That's interesting in itself. Who sets this up? Hyperion, 2014. The first thing I want to know is performance. Let's have a look at table. 10 years, up 373%. Last year, down 19%. Okay. Holdings. This is what I want. Holdings. Tesla, 12 points. Oh, that's a lot of money in Tesla. Microsoft. Funny enough, I own all these companies. Tesla, Microsoft, Nvidia, Amazon. I don't own ServiceNow. Palantir, no. So a lot of these companies I can definitely see. Well, maybe not. Own Meta. So those are the biggest holdings. So I can definitely see why there might be a little bit of weakness in the ETF. But these are all growth companies. But just the percentage for each, how they decide, I don't know. Understand? I haven't seen it. I'd like to see their what do you call it? P ratio 56.82. I like to see their mandate. Is that the right one? Right word? Fact sheet. Maybe it's in the fact sheet. Oh no, that's not good. Ew. I'd like to know what their mandate, how they choose these companies, and why they're active, how they decide to go out or into a company. I thought I was going to find that in the fact sheet. So let's have a look at chart for this one. And I would never buy this just because I'd buy the individual companies. That's the way I would play. I just had a look at the makeup, and I'm more likely to buy the individual companies. And I own half of their top 10 holdings. And yeah, my portfolio, well, maybe not this bad, but anyway, share price has dropped a lot, from 780 to 580. That's a fair big drop. If you have a look at the weekly chart, I would expect this chart to look pretty good. This is only going back. It said it had been in existence for 10 years. This doesn't look like 10 years. Yeah, so this is going to mirror. In fact, I would say this mirrors NASDAQ fairly well. Or maybe not. Not with this drop. That's not mirroring NASDAQ. That's a pretty big drop. Why is the price dropping like that? Is this an overreaction of the market? Anyway, that's that one. What's the other one you mentioned? ATEC. ATEC. I've got to get rid of some of these, yeah. ATEC. Australian Technology. Well, this is understandable why this one has dropped a lot. Beta shares, ASX, Australian Technology. Let's have a look at the companies within this, and I don't think it's going to surprise. So they aim to track the performance of the All Technology Index, which is the XTX. So this is a more passive one. So I can definitely understand what they hold here. Computer Share, Car Sales, Xero, WiseTech Global, and NextDC, REA Group, Pro Medicus, Technology One, SIG, and Codan. And a lot of these companies' share price is down a lot. Not the biggest fan of Computer Share being their biggest holding. And again, that's another reason why I tend to like owning individual companies, because as soon as I look at this, I go, no. So not Computer Share. And actually, the rest of the companies I don't mind. ATech. And this one is going to be a disaster. Yeah, that is horrendous. That is terrible. But you can see fairly volatile since they started. Oh, I definitely know why they started where they did. This was in February 2020, because that's when the XTX came into being. So they started tracking the XTX straight away. So this is just a XTX tracker. And if you don't believe me, let's add XTX to this. It's highly correlated. In fact, it's completely correlated. Anyway, so there you go. What do you think about the tech sector right now? Do you think the market is overreacting? Do you think this is an overreaction from the market? And if so, maybe now is the time to start accumulating massive volume. Look at the volume coming through. That could be another sign that maybe the low is near, just based on the volume we are seeing, this big volume. And below the 200-week moving average. I didn't have a look at that, did I? Yes, well below. The problem is some of these have not been around for long. But if you like tech and think that the market is overreacting, these could be long-term investments, particularly if that is your plan. Buy ETFs for the long term and add when they're looking good value. JLanks. Oh, yes. JLanks, a nifty screenshot tool, assuming you're using an Apple Mac, yes. Shift Command 4. Funnily enough, Shift Command 4 is my most used screenshot tool, because I do a lot of screenshots. There it is. I took a screenshot. I'll get rid of it now. Delete. The reason I do that particular command is I like to zoom in. Like what I'm going to do later in the day in editing, I'll do this. Take a screenshot of your comment and then just add it to the video. And so I do this a lot. So I'm not sure why you're mentioning this. Maybe I said something stupid in the video. That's exactly what I do. So thank you for that. And I love more little tips like this, even though I do know this tip. You can cancel the cross screen by pressing escape. So thank you for that, but I already knew about it, and I do use it a lot. But if there's any other little tips like this, tools I could use that maybe I don't know about, love to hear it from you. Not only Jay Lanks, but everyone out there. Okay, so now we're into an hour long, geez. Hi Kneppy from Kellymarr. NEC owns Australian Financial Review. What are your thoughts on the chart of NEC, Nine Entertainment Group, considering it pays a 7% dividend? Is there some value here at $1 price? Loving all your videos, trying to catch up with some of your oldest videos now. Well, hopefully I don't suck, or I did not suck in the past. Nine Entertainment Group. Okay. This might be tricky because they made some acquisitions and some disposals recently, which may affect the dividend moving forward. Here we go. Nine accelerates strategic transformation. So the company could be completely different in like a year's time, and the dividend might be a little bit lower. So what they acquired QMS Media, and they sold out of Nine radio assets and conversion of regional television station NBN from a wholly owned business to affiliate, blah, blah, blah. And then I think they've got some of the financial impacts. There we are, financial impacts. EPS accretive, they always say that. Interesting. So let's have a look at Nine Entertainment Group. We'll put it in here. By the way, I'm pretty sure they did a capital return. I'm pretty sure they did a capital return as well, or a special dividend, which may affect the dividend yield. So let's have a look at the dividends. This is via CommSec. So that's a final dividend, 53 cents. You can't look at that. In fact, if you included that, the dividend yield would be 50% because the dividend was 53 cents. So previous to that, the last two dividends were about 8 cents, which means, the dividend yield is about 7%. About 6.37%. Yeah, that's right. Okay. But whether or not these particular acquisitions and disposals are going to affect that moving forward remains to be seen. The other thing I'd like to look at is history of dividends. And we're not seeing much growth in dividends. In fact, I think there's a chance the dividends might drop. So that's another good question. Will this company maintain dividends at that current level, 8 cents per year, or will they drop? The last few years they've been dropping. In fact, in 2022, the dividends were 14 cents. So they've been dropping 14 to 8 over the last few years. So that's probably another big question. Will dividends maintain at these levels? I prefer companies that are increasing dividends over time. I do get excited about that. Let's have a look at the chart because they did do the capital return. And I'm assuming they must have had a lot of cash because they sold something or other. And in fact, if you have a look at the daily chart, you see a massive drop in share price on the 11th of September. That's the capital return. If we adjust it to include capital returns, you see a completely different chart. In fact, someone told me many, many years ago, I said, why are you because they were looking at charts, adjusted charts. And I said, why are you looking at charts adjusted for dividends? And the person said, why wouldn't you? Well, I don't know. Anyway, so maybe the market is expecting not big dividends moving forward for Nine Entertainment Group. So dividend yield looks nice, but the question becomes, is it sustainable? If you have a look at the long-term chart for Nine Entertainment Group, it's actually, we'll do the adjustment here. It's the chart of a company that I don't think is going to grow. It's not the sort of sector that would get me overly excited. In fact, there's more disruption in this space than many other sectors. And who watches TV anymore? Well, my parents do, but I don't understand it. Every single time commercials come up and I'm watching, I go, why are you watching commercials? Get rid of it's commercials anyway. for LY. Hi, Kneppy. Can you have a look at Woodside chart, WDS, and your thoughts about the company current share price valuation? Okay, so this is about the chart and or suppose valuation. Okay, I'm not the biggest fan of Woodside at all. This is the weekly chart, and the whole reason I'm not is if you have a look at the weekly chart, share price has gone nowhere over the last 20 years. Maybe you could say slightly going up. At this point, I'd get excited. I did trade Woodside. I have traded this company in the past, by the way, and I traded this in the middle of 2020 because the share price went all the way down to $12. And I thought that was good value for Woodside, but it was not a long-term hold. This was just a trade. Share price got to $34. I did not sell at that point. I would have sold before that. And the share price went 34 down to 18. And right now it's sort of in the middle. Some people are really bullish when it comes to energy, gas, that sort of thing. But the way I look at it is, I think I've already told it, maybe demand will increase, but also supply of alternative energy is also going to increase, and I think significantly over the next decade. And if prices of natural gas, oil, coal go up significantly, I think the alternatives will become even more attractive, and we're going to see more push towards alternatives. So that's what I'm thinking with Woodside Energy. I don't think there's going to be much growth moving forward. In fact, if you have a look at their historical performance, this company always pops up as this company, it's a hold. But if you have a look at returns, total return, over the last 10 years, you're getting 5.1% per year over the last 10 years. I want more than that. Over the last 25 years, it's been 7.5%. But if you go, that includes the share price running up between 2002 and 2008. If you have a look at the last 20 years, total return is probably like 3 or 4% per year. Revenue growth, pretty nice, but earnings per share growth has been negative the last 3, 5, and 10 years. So I wouldn't consider Woodside Energy to be a high-quality company, more of a trading stock. And at these levels, I could say it's probably it's all dependent. It's all dependent on what the commodity price. And everyone says this is more of a natural gas player than petrol, so it all depends on natural gas, I suppose. If natural gas prices go through the roof, Woodside Energy will benefit, but only in the short to medium term. But if natural gas goes down, Woodside Energy share price will go down. And the other thing is, I don't know what their plans are for the future. Maybe they've got something in the pipeline where their revenue and earnings are going to increase significantly. But for me, it's more of a trading stock. It's not a high-quality company. Fishball just became a member. Any chance you can have a look at EHL, which is Emeco, and PRN, which is Perenti, when it reports next week? Oh, I'm a little bit ahead of schedule here. Anyway, reports next week. Would love to hear your thoughts, especially EHL. EHL had been pretty solid in this recent shakeup. Thanks in advance. So I can't look into the future and have a look at reports yet. But if they release good reports or really bad ones, I have a closer look, just because share price should go up or down a lot. But I'll just have a look at the chart. Have a look at the chart right now for both. I was very close to trading Emeco. In fact, if you have a look at the weekly chart here, this is the chart of a non-high quality company. Now, it could be completely different than it was back in 2007. But even in 2018, share price went up to 350 and has fallen all the way back down. But some of these companies can be really good trades. So Emeco was between 2016 and 2018. Share price went from 20 cents to 340. So we're talking about what's that? That's a 17 bagger. And the chart is starting to look really good. This is just a weekly chart. It's actually looking really good. I don't mind this chart. And if you have a look at the daily chart, I nearly bought on this little pullback back in late December. I was so close. And that was at about $1.20. Very close. Share price has gone up 10% since then. Chart looks good. I do like this chart. So this is definitely on my watch list. I'm pretty sure this is in my, let me have a look. Yep, it's in my watch list. And the other one was Perenti. This is a little bit different. This one has pulled back recently, and I saw this the other day. Yeah, this one has pulled back recently, so I'm not sure what to make of that just yet. In fact, you can put a little line there. So you could say maybe this is trading in a channel right now, and the share price falls below this level, 250, that would be negative. So a little bit less bullish on Perenti right now, because this could be the bottom. This could be the bottom, and share price could go higher. And if they do release a positive report, share price could zoom higher. So both chart looks okay, not as bad as what we're seeing in tech companies, but I do favor Emeco right now. I might buy some shares, maybe. Kelly Ma. Hi, Kneppy. Is GQG Partners a potential breakout? Today up 8%. I had in my super, after tax dividend yield is 6%. GQG is a hedge against general market for me. If general market going down, the company should perform well, I guess, as its fund manager did not like tech stocks in its portfolio at all. What are your thoughts on the chart of GQG? OBS is recording is fine with me. Same value clarity, only missing your various background photos like Black Swan. Yeah, that's the only negative thing about OBS. Funny enough, talking about QGQ Partners, I was having a look at AFR today on my walk. Sometimes I got sick of podcasts, and then I have a look at some articles if I'm not running, if I'm just walking. And there was an article in here. They, I won't be able to find it now. Botanix Pharmaceuticals raises capital at 45% discount. Ugh, jeez. I've got to do the right one. Here it is. GQG's Jane says he was early but right on decision to sell out of DAC. Now, in saying that, they have not performed all that well. And the reason is because I read this. Yeah, they've still got outflows. Still got fair bit of outflows. Profits up 7.3%. But here we go. Returns over the last year, however, were well below benchmarks. GQG's US equity strategy returned a negative 5% last year compared to a 17.9% increase in the S&P 500. That strategy is now equal to the index over a decade timeline and only slightly above since inception. So for me, GQG is more like a market proxy based off what I just read there. And last year has not done that well. So maybe they are out of software, but if software bounces, if this is a low, now's the time to get in. So whether they will do that, I don't know. The association with Adani, I think, really hurt the company because before that we saw a lot of inflows. Now we've got outflows, and I want to see them correct outflows at this point in time. And the other thing is I have traded this in the past, not successfully because there's still a lot of negative sentiment in the company. We did see share price rise on Friday, but nothing exciting in the daily chart. And you can see so much volatility in this one. So what I've done with this company, or this stock, we'll say, what's this line? It's weird. It was the wrong place. So what I've done is I've just put this downtrend line in, and I'm just waiting for this to break out. And if I see this downtrend line break out, so it's close to 9 now, that would be a buy for me. That could be the sign of the downtrend coming to an end. And the reason I did that is to just get rid of all this volatility. You can just see the share price going up and down widely over like a 1 month, 2 month period. Other than that, I wouldn't own it for the long term. KM VC 7IY. Hi Kneppy, have you sold any of the US stocks too? And if yes, which ones? No, I have not sold any of my US stocks. Some are holding up quite nicely, some not so. So my strategy is, when it comes to my US portfolio, is just hold them for the long term, because I think some of these will really benefit from the AI revolution we're going to see. So Google, Amazon, maybe, Nvidia, Adobe, Apple, yeah, Microsoft, yes, Taiwan Semiconductor Manufacturing Company, yes, Tesla, Well, maybe. Meta, maybe. Shopify, yeah. Micron, yeah, that's more of a, I thought Micron was more of a short-term thing, but the share price just keeps on going up. And Constellation Software is my most recent purchase, and I'm regretting that one. But I think I shouldn't sell because I think the share price has just dropped because of overall negative sentiment when it comes to software companies. And I think we could be near the bottom. You can see massive volume coming in the last month, massive volume coming in. So that could be a sign we're near the bottom. So I've not sold out. PayPal, that was my first ever purchase about 4 or 5 years ago. I'm regretting it. In fact, I can tell you right now when I purchased it. Oh, it's not adjusting. Adjust. March 2022, so 4 years ago. And I thought it was cheap. Share price is half since then. I thought it was cheap. So it just shows you, PayPal has not gone anywhere. In fact, the company looks really cheap. P/E ratio 7.22. This company is actually growing very slowly, but they're still growing. And yeah, so profit in the last year was 5.23 billion, and the market cap is 37 billion. I do think the market is significantly overreacting when it comes to PayPal, but I'm not willing to buy more shares because the market can remain irrational for a long period of time. But anyway, the answer to your question is no, I haven't sold any. I'm more likely to buy than sell. Joseph Ackle. Oh, I've got to write down my thingy. Well, this is going to help. Joseph Ackle. There's a few more to come after this. Hi, Kneppy. Most of my super investment is in Microsoft, Google, Amazon, Meta. I'm a bit worried about US dollar weakening and AUD strengthening. What's your opinion on USD longer term? I will be honest with you. I never pay attention to currency movements because I have no idea which way it's going to move. I could have a guess that I do think there's more likelihood the Australian dollar is going to strengthen over the US dollar. And the main reason behind that is interest rates here have risen. We got CPI numbers in America. They were lower than expected. I'm dubious. I do think there's manipulation of the numbers because I'm getting indications that that's not what's actually happening over there, that there is a little bit more inflation than what the CPI numbers is trying to say there is. Anyway, that's another completely different story. But that does mean there's maybe a slightly higher chance that interest rates might drop. And if you've got interest rates rising in one country, dropping the other one, that should strengthen the company or the country's currency whose interest rates are rising. It sort of makes sense. If you had $1 million and you want to put into cash, get some saving, whatever you call it, interest rates from savings, you go to the country with the highest interest rates. Anyway, if you want to get a loan, you go to the country with the lower interest rates, which is what happened with Japan for the longest time, which is why their interest rates rising has led to money being pulled out of Japan because high interest rates. Anyway, Keynes boy said long-term the USD is the last currency standing, if you get my drift. But the other thing is I never look at the currency when I'm making an investment in the United States because sometimes you just don't know. And if you have a look at the history of the US currency or the Australian dollar, where is it? Let's have a look. Let's have a look. We'll have a look at the weekly chart. Sometimes you can see while it is on the low side. Historically, over the last, say, 20 years, probably 70 cents, 75 cents is normal. Like if it was like $1.10, I'd be piling all in. I'd be piling all into American stocks. But when it gets to like 55, which seems to be the low, 55, 60, yeah, there's less upside, I suppose. So you can actually see just by the daily chart, the Australian dollar has strengthened, and that's the reason why. But I don't use currency or expectations of the Australian dollar going up or down compared to the US dollar or the other currencies I need to look at because of my international holdings. I don't use that as a decision-making force because I don't think in the long term it matters all that much. In the long term, that's a very important in the long term. But if you're confident the Australian dollar is going to keep on going up, then maybe you could sell right now and then buy back in when it's at the high. But good luck on timing that. Ben Hutchinson, ouch, painful week. I thought pivoting from tech to commodities would protect me, but almost everything fell correlated. It's really weird because if you have a look at the ASX, XJO got to almost an all-time high on Thursday. You look at that and go, everything's fine. But then you have a look at some other indices like equal weight. This is, I think, more representative of what's happening. Definitely if you have a look at like small caps, well, that's more like equal weighted. Tech looks terrible. IT looks terrible. Even mining, yeah, it's a little bit more volatile, but still nicer than tech and that sort of thing. But it just seems like it was a much worse week than we had. And the main reason behind that, of course, is the banks. The Australian market just went goo-goo over the banks. And I think it's a significant overreaction. It's just my thoughts. Because we saw no growth in ANZ. They just cut costs. And that's good. That's great. But cutting costs can only go far. In fact, I would imagine in the long term, unless they're really efficient cuts, in the long term, it's more likely, particularly if they try to cut costs further in the future, that's going to be harmful for long-term growth, even medium-term growth. So I'm very mindful of companies cutting costs to increase their profits, because that is a sign that definitely they're mature, but they just don't know how to grow, because that is the thing they're going for. But although the CEO did mention that this is the first phase, the second phase is growth. But I like to see it. I like to see it. But I felt, one of the reasons I went to cash this week is because I got a lot of sell signals, and I just looking at my and I haven't found many buy signals. There are some out there, but I'm less keen to buy right now because I don't know which way the market's going to go. And finally, the last question of the day, we have Emeco. All this is about psychology. How do you build and maintain strong investing psychology during market sell-downs, corrections? Specifically, what rules, habits, or mental frameworks help you avoid panic and make rational decisions when prices are falling? I have rules. Simple as that. I have rules and I stick to it. And I'm thinking even I should have rules for every single company, and I haven't been doing that. So with my long-term, well, that's not exactly true. So a good example of this is Pro Medicus. So what I was thinking, I'm just going to own Pro Medicus. I'm not going to trade it. I'll just own it. Well, maybe not trade it, but I'm not going to sell any shares. And then I got to the point where I was going, look, it's a really high valuation. And I decided to sell half of my stock. So I think it was somewhere in May this year. Share price kept on going up, and I went, what a mistake I've made. Share price keeps on going up. I should have sold a cent. And now I'm thinking, maybe I should have sold everything. Now I'm more likely to buy some shares in Pro Medicus than anything else, because the share price down below 120, which is insane. So when I bought it at 55 a few years ago, almost 4 years ago, I thought it was really expensive at that point. And I think it's cheaper now than it was back then. And I think the company is in a better place now than it was back then. It's not going to be affected by AI. That's ridiculous. I think that's stupid. And the results were not that bad. I just think this is panic selling. And it's getting to the point where I'm going, starting to look pretty good. So even though I was going to say I don't have rules for like companies like this that I think are high quality, that I want to own for the long term, I do have rules. So I have rules for every single position, and I think that's important. And I will adjust my rules. So I'm more inclined now to use, technical analysis, even for these sort of positions. Telix Pharmaceuticals is a perfect example. I looked at this chart about a year ago, about 9 months ago, and I thought, no, this is a technical sell. If I was trading this, I'd be out. And at that point, the share price was about $22. And since then, the share price has gone from 22 to 876. Second time this has happened when I've just went, I should have listened to my technical side for a company I wanted to own for the long term. I should have at least sold it half. And the share price of this one just keeps on going down. I did the exactly same thing with Ordinate. This was a long-term hold. Went, it's looking pretty good. And then I got a sell signal. back in middle of 2024, but I did not sell. I would have got the sell signal probably around about $18, and I still remember that. Still thinking, going, oh, the high was 23, share price has dropped to 18. There's a chance this could be a buy the dip situation, but I shouldn't sell because this is a long-term hold. So back then, I would not have considered selling half, and I've changed, and the share price now 368. So I've changed my rules where I'm more willing to sell half, but maybe I changed my rules again where I should sell everything if I get a technical signal, and then buy back in if I get a buy signal. Yeah, so these alternate, Pro Medicus and what's the other one? Oh, Telix. What's happened over the last few years is causing me to potentially change some of my rules. But when it comes to technicals, I find, so I'm just having trouble with these companies that are not Pro Medicus, but definitely Telix and Ordinate. They have potential to be high quality in the future, but they're not there just yet. So sentiment can drive the share price down a fair bit, particularly if they've hit a bit of headwinds. And we've seen that particularly with Ordinate, and we've seen that now with Telix Pharmaceuticals. But eventually, I think Ordinate, those headwinds are turning now, right now, to tailwinds, and we're going to see the share price break out eventually. I'm not sure when that's going to be, however. But when it comes to my technical trades, I will sell at the slightest hint of a signal. A good example, Motocross Holdings. Motorcycle Holdings, Motocross Holdings. So I bought this one, I forget when. There was a breakout back in September 2024. I'm not sure if I bought on that breakout or the next one. I can't remember. November 2024, share price was just above $1.50. Beautiful trend. The first signs of the trend coming to an end was, you can see the share price getting to a high back in October. Share price went all the way down to the previous low. There was a little rally, but the rally was really weak, and that was my sell signal. So just after that, I completely sold out of this company. I forget exactly when, start of December. In fact, I can tell you exactly when I got out because it's in my superhero account. I should mark it. That's what I should do. I've always said I should mark it when I bought, when I sold, not sold, that's not a word. And activity, transactions, sales. I can tell you exactly when I sold out of Motorcycle Holdings. I'm just looking for MTO, 23rd of December. I completely sold out. Okay, I can definitely see what I did. Okay, so share price got to the previous low, 15th December. There was a really nice day on the 19th. I thought this is a good sign. And then we saw a little bit of selling coming in the next few days. And then I got out on the 23rd. That was my sell signal, and I stuck to it. It didn't go below the line. I just went, no, I don't see any enthusiasm in this rally at all. I think the share price is going to go lower from here. And it's ended up being a good decision. So what I found with using technical analysis, it has led me to sell out without any emotions, zero emotions. I don't think about it. I just get a signal and I sell out. Sometimes the signal can be wrong, but that's understandable. What's a good wrong signal? The perfect wrong signal was Venture. And I have changed my sell signals based off what happened here, which is very important. Venture had what I thought was get out of this one on the 12th of December, and I sold out of this trade, and the share price kept on rolling. It was the wrong reason to sell out, I think, on that day. The market overreacted. This was actually more like a buy than a sell, sort of like with Web. But I probably would have sold out soon after once the share price rallied. But by the way, the share price has started to turn negative for this one. So that's another thing is my rules do evolve over time, and it really helps this sort of rule making. It really helps maintaining sanity, I suppose. Sanity, healthy mental, having a healthy mental framework. I don't know. Anyway, I'm still learning. I still make a lot of mistakes, and I'm still learning. Okay, what I'm going to do now is No, that was the last member. That was the last member comment. Okay, so that's all I have for today's video. An hour and 30 minutes. So I thought this was going to be probably like an hour. Sometimes I can warble on with my speaking. If you have any questions, any thoughts, leave those in the comment section of the video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.